Okay, we have got to talk about Nvidia. The company just dropped a financial result that is so massive, it's doing more than just moving markets. It's pretty much defining what comes next for the entire AI boom. $681 billion. Just let that number sit there for a second. That's the revenue Nvidia just posted for a single quarter. To give you some perspective, that is more than the annual GDP of a lot of countries. A number this huge doesn't just get Wall Street's attention, it basically resets the whole conversation about how big and how fast this AI revolution really is. And just look at the speed of this growth. Revenue is up a whopping 73% from the same time last year. I mean, not 7%, 73. In a global economy that's, kind of sluggish, that kind of growth is almost unheard of. It's a huge flashing sign that a much bigger tech shift is happening under the surface. So what is this something bigger? Well, it's this massive, almost frantic global build-out of AI infrastructure. Nvidia has completely transformed itself from that company you knew for gaming cards into the absolute essential backbone of AI. Right now, if a company wants to build or run a huge AI model, they buy Nvidia. It's really that simple. And just so we're all on the same page, when we say AI infrastructure, what we're really talking about is the hardware, the nuts and bolts. These are the powerful graphics processing units, or GPUs, stacked by the thousands upon thousands in data centers. They're the engines you need to actually train and run these massive AI models that are changing everything. So where is all this cash coming from? Well, this chart here tells you the whole story. Gaming is still a big deal for them, yeah? But look at the data center slice. It is just exploding. I mean, this right here is the AI boom, all in one picture. When one part of your business grows this fast, it pretty much becomes the only thing that matters for the future. And here's the really crucial part. This isn't just about selling a lot of chips. It's about selling them at these incredible profit margins. You see, strong margins are a dead giveaway for one thing: pricing power. It means demand is way, way higher than supply, and companies are willing to pay a premium because they feel like they have to have this tech to even compete. Which of course brings us to the most important question of all. Can this last? Is this sustainable? We've seen the incredible numbers, but if history's taught us anything, it's that insane profits and total market dominance, well, they rarely go unchallenged for long. And this is where the story starts to get a lot more complicated. On the one hand, you have Fortress Nvidia. Their advantage isn't just the hardware. It's a software platform they have called CUDA, which developers have been using for years. It's like this deep, protective moat around their business. But, on the other hand, those incredible profit margins, they're like a giant beacon, attracting an army of competitors. You've got companies like AMD and Intel racing to build alternatives. And maybe even more importantly, Nvidia's biggest customers, the huge cloud providers, are starting to design their own custom chips to break free. And there's another risk here, and it's all about expectations. Think about it. When a company's stock has already shot to the moon, the market has priced in not just today's amazing success, but a ton of future success too. So in this kind of environment, even fantastic results can feel like a letdown if they aren't absolutely perfect. So, if you want to track this story moving forward, you have to look past the big headlines and focus on three key signals. First, check out the order backlog for data centers. That tells you about future demand. Second, keep an eye on those gross margins. Are they staying strong, or is competition starting to push prices down? And third, and this might be the biggest one, watch the capital spending from the cloud giants, what we call the hyperscalers. And those hyperscalers, they are the key customers driving this whole boom. We're talking about Microsoft, Amazon, and Google. What they plan to spend on new tech is one of the best leading indicators for Nvidia's future. If they signal they're slowing down their AI spending, that's going to hit Nvidia's growth. It's a really direct relationship. To put this all in a bigger context, just think about the AI revolution in phases. We are smack in the middle of the infrastructure build-out phase. It's like a gold rush, and right now everybody is buying their shovels and pickaxes from one dominant supplier, Nvidia. But eventually, the focus is going to shift from building AI to actually making money from AI. And that shift is going to test every single company in this space. And that really gets to the core of it, right? A historic order is fantastic, but markets are always looking forward. They don't reward past performance, they reward the prospect of future performance. The question is never just, what did you do? It's always, what are you going to do next? So in the end, the real story here isn't that mind-blowing quarterly revenue number. It's the simple, massive question that number creates. How long can this pace possibly last? As competition gets tougher and expectations are basically in orbit, that is the multi-trillion-dollar question that the market is going to be watching for quarters and maybe even years to come.